Hi everybody, it's FIBO Group and you're watching to the Market Watch Review. Stocks in Asia Pacific fell. Japan's Nikkei 225 fell 2.5% Tuesday afternoon. European shares also fell at the open. The Pan-European Stoxx 600 lost 1% in early trade before recovering slightly. The NASDAQ decline of 1.5% is causing U.S. futures to fall. On Tuesday, the U.S. dollar index fell 0.7%. As the dollar fell after the Bank of Japan's unexpected policy change, gold prices rose 1% to $1,800 on Tuesday. WTI rose 1.2%. Asian Pacific market. The Bank of Japan raised unexpectedly its limit on Japanese 10-year government bond yields. This triggered a sell-off of bonds and stocks worldwide. Japanese government bond will move 50 basis points each side of its target of 0%, up from 25 previously. This move is intended to cushion the effects of prolonged monetary stimulus measures. The central bank did not alter its yield target and stated that it would increase bond buying. This is a sign that the move was more a fine-tuning existing ultra-loose monetary policy than a withdrawal from stimulus. The greenback plunged sharply against the Japanese yen and is now at the 131 support level. The Aussie is in volatile mode and will attempt to break the 0.6675 support area and consolidate below it. Market of Euro. After the Bank of Japan rattled global markets, European shares dropped on Tuesday. The Stoxx 600 regional index fell to a one-month low earlier in the session. Germany's DAX index fell 0.3%, while German 10-year bonds yields jumped more than a month to their highest level in over a month. Market jitters were not calmed by data showing an increase in producer prices in Europe's largest economy. The euro is now at the top of the local consolidation range, around $1.0660. British house prices are expected to fall by around 5% next year as homeowners face higher interest rates, squeezed disposable income, and possible rise in unemployment, Nationwide Building Society, a mortgage lender, said Tuesday. Sterling rebounded above the $1.2105 support level. Market of America. Wall Street closed lower Monday, with NASDAQ leading declines for the fourth consecutive session. Investors shied away riskier bets because they were concerned that the Federal Reserve's tightening campaign would push the U.S. into recession. Since Wednesday's Fed Chair Jerome Powell spoke out in favor of hawkishness while the central bank raised interest rate, the three largest U.S. stock indices have been under severe pressure. The U.S. dollar fell against the Canadian dollar, despite being at 1.37 local highs. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.